Hi, welcome back again. Uh, so the whole idea of again, making the second video today is, every morning you open any business channel, right? Where do the markets go from here? Right? So that's the first common word, and even anyone actually, literally you ask the same question. If I can use the Hindi, market kahan jaane wala? Well, now let's take a pause, rewind back. What we are asking actually, how the market is going to go up. So, if you take a layman understanding, or if you take a rule of thumb understanding, I guess people want to know whether the Nifty will go up or not, or the BSE Sensex. Again, they are not correlated to each other. As you know, Nifty is made of 50 stocks and BSE index is made of 30 stocks. So let's understand this. Basically, when we say market means, a set of stocks which is included in an index, say like Nifty, as I said, 50 stocks. So that's an average weighted number based on certain formulas which you can find on the National Stock Exchange website. If you need some help, link and all that, I can send you to that also. Drop me a mail. So we are saying whether the index will go up or not. So now imagine what are these Nifty 50 stocks? So largely, they represent the main index of India. So in short, these are mostly the large, well-reputed companies, liquid companies having a very structured business model. Right? They're pretty well-known companies. If you look at the Nifty composition, you'll find Reliance Industries, HDFC Bank, Infosys, Tata Consultancy Service, and all those kind of names, right? Now, if you want to know that index is going up and down, right? You need to know whether are you really investing in those stocks. Okay, saying that a general direction of the market, if it goes down, right, it will impact three-fourths of the stocks. That's the general studies that has been done in US. Okay, in India, that correlationship might be slightly different. That's why I was telling you in the other video that okay, the data sets, the sample, the universe, what is available for the Indian market is very sketchy. So some financial institutions are doing this analysis inside, but the availability to the public is very little. So basically, what we are doing is, we are using those US research, and they may not be updated as well, and trying to coattail those numbers in India, meaning in the end, follow those numbers. Okay. Second part is that okay, there's a mid cap index and there's a small cap index. Correct. So mid cap was mid size companies, small cap index is a small size companies, right? So again, the same root question will come: are you really investing in small cap or mid cap? So this is my suggestions to you because here we are going to talk about practical. I don't want to go a lot of theory, which you will get it from the books and all. In my opinion, okay, and in my experience as well, the one index you track over a period of years, the more expertise you build. Okay? You want to go to all indexes, make it helter skelter, it's not going to help. So for me, it is all about CNX midcap. Okay, CNX midcap is something which I track from the inceptions. So why did I choose CNX midcap? I did a bit of analysis year by year. I thought that it's a fairly representation of large mid-cap and small mid-cap stocks where I do have exposure, meaning my portfolio correlationship with the CNX mid-cap is fairly decent. It's not, I can't say completely 1:1, but it does fluctuate, with the meaning that, okay, if the CNX mid-cap goes up by 1%, my index somewhere, close to near, and of course, there are a lot of aberrations in that. As I said, there's no perfect number for all this. So my intention of studying the CNX mid-cap index is to largely know that, okay, how do the market will react against my portfolio, right? So I keep track of that almost every day. I do some bit of analysis on a weekly basis. Now, these are, as you realize that, okay, index are weighted average numbers. So these are the game of numbers. Okay. So when it comes to game of numbers, which is derived from the stock market, see, there are financial numbers that are coming from the business. Okay. Index numbers are coming from the market. These are information generated by the stock exchange. So I trust technical charts. Okay. So let's jump into the CNX mid cap chart. So largely I use TradingView, a popular tool for uh, Indian stock market as well as global stock market. So let me go to CNX mid cap. Okay. So now, as you can see that, okay, this period is starting from 5th April. We'll go to a much longer period. Okay, let me make the 5 years chart. Okay, so let me tell something else, before I explain this. Market moves in cycles. Economics also moves in cycles. Why does it move in cycles? If you remember the first our video session, okay, then literally what happens is, like anything that goes up, that creates irrationalities. Anything that goes down also create irrationalities. In case of it goes higher, it creates a lot of optimism. In case it goes down, it creates a lot of pessimism. So anything extreme on the left side or the right side, it tends to balance it out. So that's how the cycle works. But again, this is a very, very rudimentary understanding of a very complex subject like a stock market, right? What principally we are looking at is that we get a broader direction. Okay, within that broader direction also, that even if we say that, okay, market is moving in cycles, right? Again, within that period of cycle, the individual components, the daily volatilities, they can dramatically be different than your plan. So why I am saying this, that okay, whatever market cycle analysis you do, or you tend to gauge a direction of the market, be prepared to have a lot of volatility. Okay, and a lot of volatility, a lot of brick bags. You can go wrong in multiple places. Right? This is how the things works. That's unfortunately. So how do we understand? So does the market moves always in cycles? Yes, it does move in cycles, but the nature of cycles are different. Sometimes it takes traditional cycles, like it will go down, then it will go up, then it will come down, which is called the waves. Why the waves are there? You would have seen, like stock prices or the index moves in waves, because again the same thing. If there is goes off, some people will book the profit, it will come back. And when it comes back, or it will falls below, then suddenly another batch of people will start thinking that, okay, this is cheap, let me buy. Then it goes on. That's how things works. So now, when you analyze these waves, over a very, very long term period. So I'll probably, rather than telling what I understood, I'll give you that, okay, how did I came to this conclusion? So I use this CNX mid cap. I've taken it almost like, the period from the inception. Let me go back to the all. Okay. So I believe it is available from 2001. So it's almost 23 years. Okay. So 23 years period, week by week analysis I did, wave by wave. So when I say wave means, these are the waves. Okay. So then I created some sort of data model saying that, okay, if this wave goes this extent, then what would be the extent of pullback, something like that. These are not foolproof models, but this gives you a basic idea. Okay, see if unless you experience it, unless you feel it, unless you do the analysis by yourself, it's never going to happen. So there is no short. You have to go back and see, and see the best way to learn market is you see these things, you do the exercise, and come back with the questions rather than looking for a ready-made answer. That is how all of the big investors, all of the successful investors, and everybody, every craftsmanship you do in life, right? It has to go through that process of learning. There is no shortcut. And that's a problem, when somebody gives you a shortcut, you just get attracted to that because it sounds easier to do it. The thing is that, okay, whether the question is not whether it is easy to do it or it is difficult to do it. The bigger question is, it is the right thing to do or a wrong thing to do. Okay, and the fact is, the right thing to do is a process of evolution, a process of learning. Okay, so during my cycle study, I can tell you that, okay, what is currently happening. So you can see, here, okay, the market, the CNX mid cap, right? pretty much it is going off. This is a weekly chart. Pretty much this is going off from March 2023 on till date. So it is roughly about 17, 18 months now. Right? So 16 months you can say even. So now look at some of these, unique characteristics of this, momentum. You will see, this is a pretty structural move. You see a lot of green bars. It is going smoothly, and there's a little pullback here. So now you see this pullback. Maybe I'll take a snippet to just to make a better understanding. Okay. Okay, here, look at this thing, if you see this pullback, 41,686, to 37,655, right? It looks like what, 3,000, 4,000 points, roughly around 10%, right? Now look at this difference. Suddenly there is, this is, I think, the March 2024 correction. Then you see this is the election week. Then you have a budget week. So what in short is, the volatility has increased. Of course, there are different ways to cause volatility as well. You can use something like what we call, average true range. So, I mean, we'll talk about some of these things, in future. But for now, I just want to give a basic direction of the market. So, in short, I said that okay, market is moving up from March 2023, okay, till date. What has happened during the second half, rather, starting from this period, right? You can say March 2024. So in this 16, 17 months of movement, first 12 months was fairly smooth. In last 6 months, the volatility has risen, meaning the prices are fluctuating more, the index is fluctuating more. Okay. Of course, now the second job in this is whenever you see a volatility, you see that okay, why this volatility is happening, because as I said that okay, index are made of 50, 60, 70 stocks or whatever, right? So in this case I think it is 50 stocks. So that individual components is which is driving the volatility. It means money might be moving from one place to another place, right? Or some stocks are static, meaning consolidating, they're not going up. Some stocks are going up. So why does this index behave in a volatile manner? Is that is another study for our filtering process. For now, we just want to gauge the market direction. So here is the thing. Generally, an uptrend, meaning what is currently is going on, right, is last somewhere between 16 to 24 months. That is how it has been traditionally for last 25 years. Okay. Is there a perfect answer to it? Answer is no. This is what is historical precedent is. So now, considering that it is, say, 18 months, 20 months on an average of uptrend, we are somewhere near the end of uptrend. That is the fact number one. So if people are saying that okay, there are a lot of positive news in the market, economy, politics, or whatever, right? Please keep in mind that we have been rallying for last 16, 17 months. We are somewhere near the end of the rally. Whether there will be, as I said before, whether that's going to create an irrational situation and move up another 2 months before it does top out, that we don't know. But it has gone off for 16, 17 months, and we are at the fag end of the uptrend. That is a fundamental truth about it. Okay. So now the second part is much more complex. What happens, what is the extent of irrationalities by going off? Number one. Number two, if it doesn't go off, will it go down? Well, unfortunately, both the answers are probabilities. There is nothing confirmatory. So the irrational prices can go up. See, in my view, I think the CNX mid cap might top out at 67,000, 70,000. But if it goes to 75,000, you never know, because irrationalities and humans, they are cousin brothers. Okay. So now the second part is, will it come down? Maybe yes, maybe no. Okay. So the third option also, it might consolidate, because the market has not consolidated for a long time. So how do we tackle the situation? So when you see this market direction, then you take a call that okay, so for example, you take a broader call. Think about it, during March, say this started in March 2023, right? See, after 6 months, September 2023, that we are 6 months into the bull cycle. So ideally, unless there is some very, very exceptional events, right? The market is likely to go up. Then you don't bother about that. There is a long leeway, there is a long runway left that okay, I can rotate the stock, I can buy and sell and all that. At this point of time, that as I said, we are at almost the end of the market cycle, right? Should we be aggressive? Answer is no. That's very, 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 very important point, right? So if you are not going to be aggressive, then what is the plan? What is the expectation? This is where the market direction is going to help. And I'll give you a caution here. Expectation, your portfolio performance, they're pretty relative to you. Okay, because there is no expectation that is designed to all human beings. See, 10% return might be small for me, it might be big for you, or vice versa. That's how the world works, right? So for me, I can share what I am thinking, what I'm planning to do. So largely, I think the market has played out the uptrend cycle, but I do not believe that okay, the irrationalities are over. Things can go anywhere. So there can be multiple permutation combinations that can happen. One, I just said that okay, the market will continue to go up. Like I just said, I'm tracking only CNX mid cap 70,000, and then started correcting like a structured cyclical manner. Probably then I'll start taking money out of my portfolio. Okay. The second choice is it does nothing and consolidate maybe for 16, 18 months, then or maybe 12 months. Then it becomes, I believe, the individual stocks will become very, very important to buy and hold. Third is okay, there is a sudden correction. There is a sudden correction of 6 months. Maybe the period is short, but it is not sweet. It might be brutal. So then, in that case, probably offloading a large part of the portfolio will be a prudent decision, and then we'll see how to come back. So the best way is have a framework in mind, but be flexible. Market loves to surprise you. Market loves to beat you down, and then as the data comes in, then we keep amending. So for now, I guess starting from tomorrow, market will pull back a bit. Okay, it is important. Again, let me tell you the important is that okay. So for example, let's go to a much shorter time frame. So you see these kind of levels, where it comes in support, right? So I don't believe in the support levels and all that, but overall it gives you a pullback. I guess this temporary pullback is not over. So these things might come back here actually, 57,600 or whatever, like another 800 points, which is not much, 1%, 2%. After that, we need to see that, okay, how the market is going to react. And then we'll take a decision. So for now, question is that, okay, should I have to sell all the shares? Answer is no. Because again, as I said that okay, from the March 2023, I started buying very few stocks, which is called concentration of the portfolio. Then as the market becomes matured and more stocks available, I started taking out profit and then rotated that money to a large number of stocks. So currently my bouquet of stocks is more than 25, right? So I don't want to sell all of the 25. They have a different nature of the the composition is made of different nature. Maybe someday we'll talk about how to construct a portfolio. So for now, I'm not going to sell those 25 stocks. I'll hang around. I'll just focus on the individual stocks. If they will see they will show some kind of weakness, I will sell. Otherwise, for me, it's a buy and hold market. Saying that, I am prepared for a downturn, but I don't want to consider this as a downturn from this day. Maybe let the data pour in for a few more days, and we'll see accordingly. That's pretty much about it. So, and again, as a parting thing, again, I can tell you that okay, giving any labels of market, support labels, resistance labels, and all that, right? They are just probabilities, just like any of the probabilities. But probability works best, when you apply common sense. It can be very simple. That okay, November, December, October. It's not October, November, December. There's going to be a winter in Delhi. Or say December, January. Right? So whether the winter, the temperature will fall down to 6 degrees starting from 6th December, 9th December, that you don't know. But that December is going to happen. So now you want to go and wait from October, it doesn't make sense. It's best that okay, you start waiting for the harsh winter in Delhi from the 1st December. That's probability. Or apply that same scenario from Mumbai, right? It's going to rain in July. So whether July 4th or July 5th is going to rain, you don't know. But the period it's going to rain because that is how the Met Department predictions are. That is how the historical data are. So that's exactly is applicable to the market. But if you want to say that, okay, 4 o'clock, 3:45, it's going to rain in, say, Worli, the answer nobody knows. So those people who are saying that, okay, it will go back, I don't know. Okay. So at least see, okay, the other thing is that, okay, we do keep blaming, that this is right. He said that, that gentleman said that. It doesn't make difference to our life. Okay. What we are going to do is matters to us. So you have to take a decision that, okay, with a conviction that, okay, this is how the market is going to behave. This is what the market looks like. And I am flexible to change the opinion, as the data comes in. And then, track your portfolio. So now I'm giving a caveat here. So my portfolio also consists of some future option, which I'm not talking here. Otherwise, I'm a largely small cap investor. Sometimes I invest in mid cap and all that. So all may not be comfortable in doing that. That's why I said, portfolio construction depends on your experience, depends on your account value size, meaning portfolio size, depends on how the market cycles are behaving. So all these things are intertwined each other's. A journey never stops in a single day, right? We'll keep more talking about it. Thanks if you are hearing. Take care of yourself. Good night. Bye bye.